everybody. Welcome back to the channel. Appreciate y'all for being here. Kind of a rough day in the market. I don't like what the market did today. Not at all. But sign of the times. It's kind of seems like the momentum's kind of petered out up here. We've been saying that for a while. So be that as it may. Be that as it may, let me hide this. Okay, so here we have a chart of the Qs. Now that's a daily chart. Let me, let's put that regular right here. I mean, today was down 2.2%, 2.03%. We made a higher low than, when was that, last Friday, or last Thursday? We sold off last Thursday and then bounced Friday. Do you think we'll bounce tomorrow? Who knows? Maybe. Maybe not. It's Friday the 13th. Depends on what happens on CPI, I would guess. All right, let's look at the SPY. Now, on the daily chart, it looks like the SPY actually left behind no, I thought the SPY left behind a rejection tail, but it did not. It looks like it closed on the lows too. Let me get this darn thing off of here. All right. Yeah, no, not much of a rejection tail. It closed on the lows too. It looked like Thursday was a sell-off last week. Closed off the lows on Thursday, bounced on Friday, bounced on Monday, Tuesday, Wednesday, petered out. Here comes Thursday again. So, let's look at that chart I had up here. Let's look at this. This is an overlay of the, well, it doesn't work there. Never mind. I don't know why that doesn't work. All right. Well, anyway, let's look at Bitcoin. I was trying to overlay the pros versus Joe's indicator. I had it working just a second ago. All right. All right. So this is a daily chart. These are daily bars. That's just a solid downtrend. What's up, Dividend Degenerate? And we got William in the house. Hey, William. Thanks for being here. You as well, Dividend Degenerate. All right. Well, I mean, it's all about, I mean, I hope we don't take out this low. That'd sure be ugly. Hopefully we'll make a higher low and then manage to rally, but we haven't even had anything that even looked like a rally lately. I mean, anyway, been a while. I mean, the last rally we had was middle of December in Bitcoin, and heck, we got almost 100,000. But all right. All right, there's a little better look back. I mean, yeah, this is just, I mean, that's a steep sell-off. That sell-off pretty much hasn't even had a fake rally or anything. He hasn't even had a fake out, at least. Anyway, all right, well, I mean, we're overdue for a bounce. We're overdue for a bounce. But, man, that'd be bearish if it took out the 60, in my opinion. All right, so that's Bitcoin. Let's look at gold and silver. Gold is actually down 3%. Boy, I bet you the divas are sucking. If gold and silver are both, oops. I haven't even looked at the divas yet, but my gosh, I mean, this is going to hurt K yield, right? Because K yield has the gold, more gold and silver. Oh, geez. All right, well, let's look at the divas. Rip off the Band-Aid. Let's just start with K yield to get it out of the way. I mean, I can't imagine this has done very well. Down 4%. That's actually not bad. I mean, considering it didn't make a new low. At least it didn't make a new low if you factor in dividends. But even if you take dividends out of there, it has not made a new low. The low was last Thursday. Even if you factored the dividends out of there, it's not making a new low. But man, that is ugly. And this, I was just putting a line on this last Bitcoin sell-off that, and it was straight down. And I said I hadn't even taken it. It's the same line as this. I mean, that's nasty right there. I mean, that is nasty. They went straight down with it. Anyway, okay, let's put dividends back on. So at least this shows you what your actual investment is doing. So your investment, you bought it at 23, it's trading at 19.5, you're down 3.5 points, in 4 months. So, which is about 15%, which is not great. Unfortunately, it's holding up better than these other dogs. All right, speaking of other dogs, let's go to ULTY. Yield Max, these guys, puts are doing a good job. I mean, look how much higher they are than their April low. Now, none of these other ones can we go back to April, so that's not really a fair comparison. Let's compare it to something like that can go back to April, like I don't know, SPY or something. And of course, everything's well above its April lows, of course. Well, not everything, but lots of things are above their April lows. All right, so let's look at blocks now. I was glad that, well, let's go back to ULTY. I mean, it on the chart, it's holding up. It's not taking out last Thursday's price. And last Thursday's price was actually a little bit higher than the price back in November. So the dividends have kind of been adding up, and they've kind of stabilized the situation for now. But as soon as we have a big sell-off, a steep sell-off, they won't be able to hide from that. It'll make a new low. All right, so let's go to ULTI. Now this is the Rex version. Similar idea. It's the Rex version, and this one, even with dividends factored in, is still not on a new low, which is good. Even with dividends factored in. Meet Kevin is saying the financial system is starting to freeze up, starting to cease up, I don't think Meet Kevin's the greatest source for information, but he could be right though. I'm not a huge Meet Kevin type of guy, but he's probably not a big Max Convexity fan either. So, right? Who cares? All right. Anyway, ULTI really got hurt. I mean, down 6.5%. I mean, that's ugly. Let's look at IBIT. IBIT was down 3.25. Okay. Well, that's ugly. Now let's look at blocks. See how far blocks is down. Now blocks is still way over its Thursday low, and it would be over its April lows too if it went back to April. It'd be well over that. But blocks was only down 1.9 today. That actually is better. I think David obviously had this hedged, because without looking at the trades, he was somehow in better shape than, because usually he drops about the same as ULTI, and sometimes not as much, but usually about twice as much as blocks and K yield. That they were both down 1-3 points. So a typical day, I think this would be down 4 or 5%. I think that, I guess he has hedges on or whatever. Great job, David. Great job. I mean, on a relative basis, it sucks to be down 1.9, but it's the fact that your main competition is ULTI, K yield, and ULTY, or those are the closest comparisons in this sector, and so doing really well. In fact, I mean, usually ULTY is the safest one on the way down, but not today. Even ULTY was down 2%. Blocks is even safer than ULTY. And that's impressive, because that hardly ever happens. ULTY is almost always the safest one in a sell-off of the bunch. Okay, so now let's go over to the actual Diva spreadsheet, and let's look at this graphically. Here's the day, so we can, if we want to look here, all the way over here to the right. I know it's hard to see, but I mean, this is, pretty bad, but it could get a lot worse. Look, there's last Friday right there. Here's last Thursday. Last Thursday and Friday both looked worse. And we had, a handful of other days that were that bad. So now let's look at the rolling total return. Boy, every one of them is turning. Every one of them's. No one made money today. Not even Chippy. Chippy turned around. Chippy's only up 13.4. SPY is almost losing its grip on being above zero. Think about what a bad market this is, or untypical. Most markets that you're, or I don't know, most is the wrong word, but typically you can almost always count on the price a quarter ago to be lower than the price now. The SPY is, I mean, especially the past 4 or 5 years, not in 2022, but, and this is more than a quarter and the SPY's gone nowhere. I mean, that's, you know, that is rough. Anyway, and look at the Qs. The Qs, the mighty Qs are down 5% over 4 months. That's, you know, that's crazy. And then we have QLDY down 7.1, triple Q down 4.4. This thing's just shadowing. As long as the market keeps going down, this thing will drop a little bit faster because of lightning spreads, especially on a big down day. But we just need to have an up day. We need to have an up, you know. You can see back here that whenever the market started rallying, that the QLDY almost passed the Qs. It looks like it may have for like a day or two. Then the market sold off again. And all right, well, good job, QLDY. But anyway, then we have GPTY is only down 13%, but that's still terrible because that's a good fund. That's a good blue chippy, safe type fund, considering the, you know, comparatively, let's say. You know, it's just getting murdered, you know, and I think people think that K yield is managed in a safer way than some of these other ones. And I would agree it is, but even it is just getting taken out to the woodshed. Now, ULTY is only down 19. It's kind of pulling away on WPay. WPay is down 23. LFGY is just getting oh my gosh, down 27.5. Blocks is down 32, and then ULTI is now the #1 first place loser, down 35.08. Wow. All right, so we can let's get the StockTools.app going, and let's look at the whole universe and not just the 5 or 6 funds that I like. Well, one thing though, speaking of the 5 or 6 funds I like, I wanted to look at ISSB from Granite Shares. Okay, so this thing gapped down, closed on its lows. But of course, it's stocks, which were down 2% or 1.5, depends if you use the SPY or the Qs. Stocks were down 2%. And it's also Bitcoin, which is down 3%. So I would expect this to be down 5% or whatever the, you know, the sum of it plus the financing charge, which it was 6.4. But yeah, that's just, that is a nasty sell-off. I mean, we hit 98,000 on Bitcoin, and within 2 weeks we were at, or not even 2 weeks. I mean, that was just a really fast sell-off. A really fast, scary sell-off. All right, anyway, that's ISSB, and so this is ISBG. These are divas. They just aren't on the diva spreadsheet yet. They're acting like divas. They have all the qualifications of divas, right? I mean, they're acting just like the other divas. I mean, in fact, ISBG is saying, I mean, ISBG is like, come on, ULTI. I'll see, you know, hold your beer. I mean, hold my beer. Come on, ULTI. I will show you what a real diva is. Well, you got this thing down 8%. Anyway, of course, it's Bitcoin and gold, and it goes up at the same time too. It's leverage, so it's doing what it's designed to do. Bitcoin was down 3. Like I said, gold, I forgot what gold was down. I know we looked at it, but it was down like 6 or something. Anyway, sure enough, the two of them are down 8 together. So, all right. Anyway, okay, back over to the universe of all the funds. Okay. So this is just on a 1-day basis. We still have this has got to be wrong. There's no way MTYY is really at 14% today. I know we talked about this earlier in the day. I have to think that is wrong, right? So let's go look. Yeah, MTYY, which is the Granite Shares Yield Boost Micro Strategies. I'm just making sure I don't have something wrong or something. It just, how is this down? Okay, well, that's the thing. It wasn't really down that much. It was, or it wasn't up. So that's fake news, which makes sense. That makes me feel better. Okay, so MTYY was down, and of course it was down. We'd expect it to be down. We would expect it to be down. Okay, so back to the divas. MSFY. Now this might be a flight to safety. I could see, that, but let's check and make sure. So see, the other one's wrong. Let's just make sure. Yeah, this is saying it's down. So I think that maybe this just needs to reload, or maybe there's a data error or something. But we can always go to the. We haven't looked at the index buffer in forever. We'll pull up the old index buffer report, which is showing us the same thing. All these things, everything I show you is the same thing pretty much. How well the high yield fund's doing, and then how well the parent's doing. Even though we know it's not going to beat the parent over any course of time, we want it to be as close as possible. So, so let's start over here. This is a good day to look at these. Okay, so I have something called the Feet and 5E doctrine. Feet and 5E are the two worst funds that YieldMax makes, in my opinion, or I don't know the worst. There's some other bad ones too. Two of the poorer ones. Anyway, they're always down the most. Some days they're up the most. Well, on a big down day, they're usually down the most. Anyway, sure enough, they're both down 3.2. But I mean, look at old YSPY. Now, YSPY is from Granite Shares. They use leverage. They sell leveraged option contracts. And it caught 3% downside. But even the safe ones, like SPY-T's. SPY-T is one of the better ones. XDTE is one of the better ones over here, right? Where's XDTE? My point is, I think even the safe ones, JEPI, no one would argue that's not safe. And sure enough, out of all of them, JEPI had the best performance today. Now, JEPI, they don't just sell options on the whole index. Well, actually, they do. They sell index options, but they buy stocks not in the whole index. So the stocks they choose 100, 130, 120 stocks, and I think they have a value screener or something, because they generally run a value portfolio, which would make sense, because it should be doing better lately, because value's kind of taken over. In fact, I bet if we run a 1 month comparison on JEPI, against one of these high flyers, like XDTE, I'm thinking maybe JEPI, just because of the value play, might be doing a lot better lately. Anyway, here's XDTE. This is a good one. It was down 1.5. The parent, its index was down 1.5. So SDTY down 1.5. T-SPY down 1.5. I mean, these are good funds. I mean, there's nothing wrong with these funds. You're just following the index. WDT is actually just fine. It's down the same. GPIX down 1.3. Some of these ones that do monthly options didn't catch all the downside, but the ones that do daily options, they all got all the downside. These all do daily over here. Anyway, so the monthly options here, we have JEPI doing a little bit better, GPIX doing a little better, and we have SPY-I, and then we have, okay, now iSPY, back to daily options, and sure enough, I think they sell daily. They sell deep out of the money covered calls. Or is that SPY-I? No, that's iSPY. SPY-I does out of the money covered calls also. All right. Anyway, then we have XDTE. We've already talked about that one. That one's on there twice. S falls down. All right. Well, let's go over here to NASDAQ land. So the ones that are the worst, we'll just go. It's got to be ULTI, right? Of course, we'd expect that. And I mean, it's going to be blocks and K-Yield and LFGY. And sure enough, they're all getting murdered. YMAX is down 3.3. WPay is down 2.9. YMAG is holding up a lot better. QLDY, catching all the downside plus about 0.5 point. is lightning spreads. So that makes sense. It's doing what it's supposed to do. On a big down day, you're going to catch a little bit of extra downside. The lightning spreads, triple QT, I mean, it's caught all the downside of the market. Triple QY caught all the downside of the market. AIPI did better. GPTY had a little bit of buffer relative to the Nasdaq. ChipY outperformed the Nasdaq a little bit, but even K triple Q it was underperformed its benchmark. I mean, picked up downside or picked up momentum going down. You guys know what I mean. It's doing the opposite of what it's supposed to do. We've already talked about QLDY. We've already talked about these guys over here. These guys are all divas. I mean, okay, TDAX. TDAX, not a diva, but it's just a leveraged product from Tap Alpha because the leverage, we'd expect it to get hit a little bit worse. TDAX might be a good comparison for QLDY. QLDY, lightning spread is kind of like a synthetic, or I call it a hidden leverage or virtual leverage or something. And then something like TDAX just uses actual real leverage. But, the thing about either one of those funds are we'd expect if the parent is down 2, that they might be down 2.5, kind of like which one was this? Right, like TSYX was down, the SPY was down 1.5, TSYX, Tap Alpha uses a little bit of leverage, it's down a little bit more. QLDY, same thing, uses a little bit of leverage. It doesn't use leverage, but because it's lightning spreads, it's kind of synthetic leverage. Sure enough, its parent was down 2, it picked up about 0.5 point. Anyway, I'm just saying I might want to start. I think that's a pretty fair comparison, probably a QLDY to a TDAX. Because TDAX should also do a little bit better in an up market, kind of like QLDY should do also. So that might be interesting. I'd like to do some content on TDAX and TDAC. We got to get at least a month's worth of data in them. Anyway, triple QI looks good. The best looking ones on the Qs is actually YMAG or GPIX. I'm just looking visually to see which ones. I hate this one, THTA. I don't like it, but it held up better than any of the other ones today. It's an income fund that probably is fine for some people. It's just not my cup of tea. They do. It's a long story. All right. Anyway, it held up today though. THTA. Good job. Good job today. So then we have U.S. Even oil got hit today. TLTW was up. Bonds were up. And XOVR was down, of course. And then I'm really not liking Salty at all. But finally it had a good day. I mean, Salty should beat YQQ in a bad down day. And it did today, but there's lots of bad down days. YQQ, slays Salty. Salty's one of the other. Salty, Feed, and 5E are 3 of the worst, just mathematically speaking. 3 of the worst performing ones in the YieldMax universe. All right, what do you guys want to talk about? We got JT in the house. JT's calling it a full bear market right now. I don't know if I'd say that. I'd say that in crypto for sure. I mean, as soon as we lost the 200-day moving average, I agree with you in crypto for sure. And it could spread into the other part, but a full bear market would be the look we had in April. It didn't last long, but you remember the S&P lost the 200-day and then sold off for another 2 or 3 days after that until Liberation Day. So it could get a lot worse. That's what we're hoping to avoid. I was going to put my disclaimer up there. All right, guys. But yeah, it's ugly. It's ugly. Okay. Congratulations, Dividend Degenerate. His positions held up, and we got Doug in the house. Now, you've commented before because I remember you, but I appreciate you coming back. You think K-Yield got out of some of their gold and silver? Hope maybe so. And Blocks did something defensive also. I'm just by looking at the results. Blocks did something defensive. I'm going to go read ETF Delta's Substack. He covers the trades of some of these divas. He'll what stocks they're buying and selling. And lots of times he covers Blocks and ULTY and sometimes ULTI and others. But it'd be interesting to read his take on it. He is really, it's actually the only person I subscribe to, I think. Yeah, I actually subscribe to his Substack. I don't even subscribe to Rod's channel or whatever. And I like Rod, but I'm saying but just fine. But yeah, I actually subscribe. That his Substack is wonderful. Also, you have to subscribe because he doesn't have a YouTube channel. I can just go talk to Rod anytime I want. He has a YouTube channel. All right. Fish says, hey guys, everyone's saying, hey, oh, you missed selling Maggie by a half a penny this morning? Wow. Well, I'm sorry to hear that. Oh, and you want to get some more XDTs? So you're trying to de-risk a little, trying to move money from out of 7 stocks and into 100 stocks. XDT is a good one. It is a good one. Yeah, no, my gut's telling me the same thing. But yeah, okay. So let's go talk about that right now. Or let me make sure all the questions. Let me say it's not just my gut. Also, mathematically, I think there's something going on. B-Pro. We'll look at B-Pro and a little bit skeptic. I've seen that one before. I just forget what it is. We have Mark in the house. Hey, Mark. You don't see XPay on the list. We'll go look at that. We'll go look for XPay. It's on there somewhere. It could be Fish. It could be. Those are good theories. All right. So I guess let's check out Marcus's first, but then I want to show you I want to show you the pros versus Joe's indicator. But let's Marcus's stuff is likely more interesting than anything I have to say. So B-Pro, I remember what that is, but it's leverage, right? Oh no, I didn't know this. Okay, but I love Bitwise's stuff. Bitwise is they have some interesting funds. They have some like I think Bitwise has the fund where they use like the 200-day moving average, and I think they own it's a rotational Bitcoin. They own Bitcoin and Ether, but then whenever those go into a bear market, they just switch for bonds. I forget what it's called. You guys always have to remind me. I thought it was a Bitwise one. Anyway, let's check out this Bitwise one, and then we can talk about my Bitwise one too. So I got that. Bitwise portfolio currency debasement. What is, oh yeah, financial professional, or I'll just do individual investor. Okay. Okay, so yeah, I'm trying to find the fund I was talking about. I don't think it's in here. I think it's BITB is Bitwise, Ether, VSOL, XRP, BWOW, it's Dogecoin. Yes, BTOP. I love the idea of BTOP. Okay, but let's go stick with Marcus's first. I just wanted to. Okay, so B-Pro. Let's see what B-Pro's doing. Currency debasement. So I'm guessing it has some gold and some Bitcoin. But let's see where's its holdings, or where's its little description. Publicly traded. Okay, well, where's your sales literature on this thing? We're calling it thematic. Oh yeah, here we go. We go to they have a different site for their ETFs because of probably legal reasons. Okay, so here's what they own. They have physical gold, some Wisdom Tree physical gold. They have Ring, which is gold miners. They have IAU. They have SLV. It looks like they have a lot of gold and silver. Do they have anything that's not gold and silver? And they have Bitcoin. They have the Grayscale Bitcoin Trust. So this one might be a fair comparison for something like an ISBG. Good Bitcoin and gold. Now, I don't know if this is leverage. It might not be a super fair comparison, but it's just something interesting to look at. So it's called the Proficio Currency Debasement ETF. And they seek to invest in assets that the managers believe are likely to increase in value as a result of fiat currency debasement worldwide, from gold to mining gold and mining equities to Bitcoin. All right. Well, yeah, that's a good one. It's not as cool as mine, though. Now, this V-top, we've been talking about this. I found this one a long time ago, and I love the idea of it. This is what I was hoping that feet would be like. You know, I'm always griping about feet. They're supposed to be buying momentum. This is a momentum strategy. And but anyway, feet's supposed to be too. But I was hoping the feet kind of work more like this one does. So let me show you what I mean by that. So B-top, let's see here. I guess let's just read the investment case, summary prospectus, fact sheet. Let's see what they say the investment case is. I just like the idea if it takes emotions out of it takes judgment out of the deal. So, so these guys, they aim to provide exposure to crypto assets with higher risk-adjusted returns, they hope, and lower downside risk, they hope. Hang on, that's my buddy. Hang on, I want to make sure that because there may be an emergency. It's not an emergency. Okay, that'd be awesome. All right, so I'm going to have a call scheduled with him tomorrow night. All right, well, I wanted to see what they're using for their trigger. So here it is, BITC, the strategy invest in Bitcoin futures when the 10-day exponential moving average of Bitcoin crosses above the 20-day. I love this. I thought it was slower than that. I thought it was the 2. It used to be. So they're doing the 10 and 20-day. Conversely, when the 10-day falls below the 20, it reallocates to treasuries. That is awesome. So then AETH, all three of them do this. So AETH is Ethereum. It's the 20 and 10 day, and it's Ether. BITC is Bitcoin, and BTOP is both a 50-50 basis. And it is the 10-day versus the 20-day. Okay, so that's very interesting. So let's look into that a little bit. Can you guys see that? I'm making sure. Am I sharing? Yeah, I am. Okay. So let's look into this darn thing. BTOP. I mean, I love it because you sidestep some of this downdraft. You know, I mean, there's no free money, so it still has to fall. You know, it can't. I mean, but you know, you have an asset that's fallen from 40 to 27, which is terrible. And from last August till now, 40 to 27 is bad. But let's overlay IBIT, which is Bitcoin. I know that it's not really Ethereum, but IBIT has dropped, you know, further. You can see it. I mean, that because they're on the same scale. IBIT went up further and dropped further. But really, if you go back to the beginning, you've just been better off. You've been better off just in right now. If you go back, IBIT would have just, you know, Bitcoin's up 56%, and this thing's only up 24%. So you left upside on the table, but in the sell-off, I mean, you know, you did a lot better. Anyway, okay, well that's good to see. So let's I thought this might be interesting too. Let's just make that disappear, and then let's do this. Let's do this, and then let's do 10, and let's just put on their trigger 1020 EMA. All right, so here's actually what they're doing. So they would be out right here. So they got out of Bitcoin, you know, right here at this price, and they missed all that downdraft. And they got back in right here, and that turned out not to be a great signal. And then they got out. Their last good signal they had was when they got in April 21st, and they rode Bitcoin up from April 21st all the way to the July high, or that August 13th high was incredible. They caught all of that because it's been above the, but then when it crosses under, then they're out for this. Caught a little bit more upside, and then they're out for that. Anyway, looking good. So fish, didn't know about BTOP before. Yeah, we talk about it every couple of months, then I forget about it, and then Alan has to remind me. And I always, and somebody, one of you guys always remembers. Always go, you remember that one where they switch in and out? And I always have the details wrong. I always say it's the 200-day, but it isn't. It's the 10 and 20. But that makes it actually, that's almost like a trading index. That's really cool. BTOP, what's that? So you don't like B? Oh, we got a new commenter here, Mark. I don't think I've ever seen you in the comments before. So Mark's saying, I think I would stay. You think you would stay off B Pro until gold rebounds? Yeah, I gotcha. All right. Well, what else do we need to look at, or what else do you guys want to look at? Let's go over here and give this another try. I don't know what's going on. I think let's go over here. Well, I don't know what the deal is. I don't know why it's taking so long. We can talk about anything you guys want to. If you have any questions, put them in there. I still have made up my decision on whether or not I should do the YieldMax interview live, or I'm kind of hoping one of you guys have a strong, or you guys have a strong opinion one way or the other. Because I don't really have a strong opinion, I would probably just do it. But I it's the interview's next Monday. It's next Monday, like at 2, with Mike Coe from YieldMax, and my only decision is do I go live and just have them on live like we do every time, or should I pre-record it and then try to cut it together and try to make a little, better video? You want to? Oh yeah, pros versus Joes. Thank you, Alan. Thank you. 100%. I want to go look at that. All right, so let's take off. Let's put on the SPY. Okay, so we're gonna put on the SPY, and no. Then we're going to put the pros versus Joes back in here. So let's just hide that. And then let's show this. Okay. You can see back here, April, May. This is a different way of looking at the pros versus. Sometimes I show the pros versus Joes and the moving averages of them, and it gives an all clear signal, then it gives a caution or whatever. We can still do that. This is the same thing, but instead of showing the moving average, I'm just showing the price. The green line is the pros versus Joes indicator. The pros versus Joes indicator, April, May, was making new highs, was trending up, higher lows, higher highs. And even we came in here till August, August 13th, and the pros versus Joes made an all-time high since I've been watching this thing. And then the market kept going up, but the ratio started going down, which means people are putting on hedges, and not only hedges, it means people are buying. It means people are hedging VIX itself. It means that the volume or the IV of VIX call options is going up, is attracting more interest than even the IV of just VIX. Anyway, that causes the ratio to go down. So it's like an RSI divergence. Now, divergences can play out for years and not, we made another high right here and it wasn't supported. And then the market sold off a little bit in November. I mean, that was pretty bad when you were living through it on this chart. It doesn't look like anything. But then the market started rallying again, and the other indicator gave an all clear signal. But you could see, the market did rally. We made a high, and then the market made a new high. The indicator made kind of a lower high, and then kind of a tie. But right here, it really gets ugly, because right here, the highest high lately has been this day. Okay. In fact, that day was the high in the SPY. And you can see the ratio was well off its highs, meaning people are hedging up here. And that's why I think it stopped going up. I mean, or it just seems like it just, You know, there's something structural up here. All that it's just, you know. Now that doesn't mean if the CPI number is not a certain way tomorrow or whatever, a number or something that comes out can't change the way people think, and then people, you know, I'm not saying that we're going to be stuck here forever, but right now we have a pretty serious divergence that probably needs to play itself out. There's other times you can look back in history where where the same thing happened and it didn't sell off, but then there's lots of other times when it did. But it's just a good caution light to have. Like back here, look at here. In January, we made a new high. In December, and this is when I first started the model portfolio. I remember this market well. Mid-December, I was in, and then we made a new high. I'm like, okay, rock and roll. Here we go. You know, and then market made a new high into February, and the ratio didn't. And of course, you guys, we were living through this together. It wasn't just because of the ratio. The market, there was just bad stuff going on and right around here. And people thought the market might drop. A lot of you guys hedged, and sure enough, it did drop. It did drop. But right there, you can see a bearish divergence that's worked out. It's actually, you know, that this, you know, right here and right here, these highs were totally unsupported and by you know, VIX versus VIVIX. All right, Marcus is keeping on. So, okay, what you guys are talking about. So let's in the comments, you guys are talking about COMD, which is just a brand new global X, and it's just commodities. They have like I saw a portfolio. They just have commodities. So they have 35% T-bills. It's a cash, but then they have gold. Gold's their heaviest weighting. It's probably momentum weighted, and then they have Brent, which is crude, North Atlantic crude, not Texas crude. WTI is Texas crude, West Texas crude. That's 3%. But it looks to me like they probably have some type of trend following or long short, some type of commodity trend following strategy should do great during inflation. So the other one that kind of, or something else that does something similar to this is hard, of course, which is the simplified commodity strategy. No K1. I don't think any of them have K1. I think that ETFs don't have to have K1s. But in the old days, to do commodities, you had to do a different structure. So I don't think COMD is a K1 either. I think it's no K1. But back when this one came out, it was kind of revolutionary to have a no K1. Let's see how old this one is. Yeah, this one came out in 2023 or something. It was introduced at 2020. It was introduced at $25. Fell off pretty quick to 22. So it's down 15%, pretty quick in about a quarter. And then from there, it's taken off and to the moon. Anyway, let's look at their holdings. So they have some T-bills, and they use a little bit of leverage. You can tell in here because they're more than 100, but they have a derivative offset. This may be a long short strategy, but maybe not. Anyway, let's see. They have cattle as their biggest holding, soybeans. Then what are those? I guess what's B? Is that just I guess a T-bill? Yeah, those are good. Yeah, T-bills. Then they have cattle, soybean. This is interesting because they don't have financial futures, and I think that's the thing about this one. I think that's their thing is they have actual physical futures. So that's why it's called hard assets. Yeah, that's what it is. Because they call the S&P 500. You'll meet people that trade S&P futures, and they say they're a commodity trader. And what's your you know, I trade S&P or I trade bonds. You know, there's people that are commodity traders that trade bonds all day. Well, you know, this is this. Yeah, I forgot what I was going to say with that. But well, look at all the AUM that's come under. This only had 7 million under management, and then starting at the end of 2025, you know, it just ballooned up to 41 million. I know I was going to say, so some people don't really consider financial futures. Some people get futures and commodities mixed up. But anyway, but financial futures are a little bit of a different deal. So that's it, because it's paper related. It's like a piece of paper that is not a hard asset. So yeah, for inflation purposes, and be cool to have some cattle and soybeans. I would think oil would be a hard. I'm surprised they don't have oil in here. You know, it's doing well. Whatever they're doing, it looks like they're doing a good job. On COMD, well, we don't know yet. It's brand new, right? So I didn't read the. Let's just. I was going to try to go to it. Let's see here. COMD TF prospectus. That's my fastest way to get to the right place. If you type ETF and then prospectus, generally the first result is the one that you want. All right, so it probably says in here if they intend to pay one or not, but I mean it's probably too new to. Let's just read what they say. It says it's actively managed. Of course, the fund gains indirect exposure to commodities through futures and ETPs, ETFs for portfolio construction. The portfolio managers typically utilize quantitative macro trend and momentum analysis, the models developed by WealthSpot. Okay, so that's probably their sub-advisor. So these guys are all, I mean, these guys, I guess these are all hard. These are definitely hard asset futures also. There's no bonds and indexes. So this is definitely true commodities where it's something that you can actually take delivery of and hold in your hand. You know, you can't hold the S&P 500 in your hand. Fish, your chippy cost basis dropped because of rock. Well, you're planning on buying some GPIX. My Q funds are dropping because people selling tech. Yeah, true. Mine too. Do you have any blocks? Oh my gosh. I have blocks, and I mean, I guess blocks is the riskiest fund I have anymore. Because I don't even have that much ULTY. I'm down to like 6%, but I still have like 12% blocks in the model portfolio. And then I get hit pretty hard when it takes. Well, I actually, K-Yield's my biggest. K-Yield's risky. I have K-Yield and blocks, so I definitely take it on the G. I mean, I'm all in on tech too, unfortunately. Comparing hard versus commodity, only difference Marcus can see is hard pays quarterly. Oh yeah, commodity pays semi-annually. I don't think those types of funds, I don't think those don't lend themselves to be income funds. You know, that's more like for bonds and the financial futures, like, you know, commodities that are financial, that would, to me, would lend themselves more to like a paying fund. This is more like a place to hide your money from inflation. To me, that's what I think. That's what I think is the use case there. All right, did the market open up again? Was it past 5? Yeah, 526. See if the market's still selling off. Let's get on to a shorter term time frame. So what happened this morning? Was there a number out? Did somebody tweet or something? I mean, the first bar of the day just was 9:30. Well, I guess no, it's not the first bar because it's 9:30 Eastern, but this is in Central. So the first bar of the day right here went sideways. It was a doji. It was that little green one. And then the second bar took out the low and just kept going. So right now, though, are we bouncing? Yeah, we're bouncing a little bit. We're up 16 bips. It's a long night, though. NASDAQ is up a 1/4 point. So we are bouncing a little bit. Yeah, fishes and blocks also. Well, fish, we'll do fine. Whenever the market turns around, we're going to be leading on the way up. You know, I mean, but yeah, my blocks and my K-Yield have been killing me. I'm just such a homer. I'm just such a tech fan. And being a tech guy works until it doesn't. Well, good. So you're saying it's not, hopefully you have, so you're saying you have a lot more other places. Well, that's good. It's good. I'm glad to hear that. But I do think, I mean, I don't think, I know, and we've had one before. Look what blocks did this summer. It freaking printed money, but also Bitcoin was, melting up this summer at the same time the market was melting up. So BR says we have CPI in the morning, probably more volatility incoming. Yeah, and we have of course, we have Friday the 13th. I'm kind of superstitious. I've just always been. It probably means nothing. I'm not going to be in the office much. My son's in town from Oklahoma. Him and his girlfriend came to town to go to a show this weekend. They got an Airbnb, and I'm showing them around town. We hung out all afternoon today. I took him to Guitar Center. They have a new Guitar Center that I've wanted to check out. My son's a guitar player too, but it is gigantic. Biggest Guitar Center I've ever been in. It just opened here in North Austin or Northwest Austin, and it is really cool. We went in there and hung out for a couple of hours, and I showed him around some other stuff. Anyway, I'm taking him to lunch tomorrow, so I'm not going to be in the office much. I'll be around for the morning show, and then I'll be around for the evening show. But I'm going to be out of the office much. But yeah, it should be by the time CPI happens. And by the time the market opens, if we can get by CPI and we can get by the market opening without it cratering, that'd be a step in the right direction. But yeah, if it's a bad CPI number, I mean, of course it could be a good CPI number too. Sometimes it surprises in the other direction. And sometimes even though it's a bad number, it's so bad that it's good. So you just never know with those things. But yeah, I think we have a lot of volatility incoming myself. And I've been thinking, that's why I'm pretty much, that's why I've been de-risking, but I'm de-risked as far as I want to de-risk right now. I mean, I'm going down with the ship at this point. I have my allocation and I'm sticking to it. I have like 30% in inverses and tail risk stuff. And, I have a little blocks and I have a little K yield and a little ULTY, not as much as I used to on the ULTY, but I'm going down with the ship. I'm going down with the ship at this point, right? Good captain always goes down with the ship. All right, guys. Well, what night is it? Wednesday night or is it Thursday? Oh, it's Thursday night. All right. Well, probably we'll have I'll do a daily factor tonight. I felt bad I didn't do one last night. So, and I'll try to make it 8 so you East Coast guys can get there, which should be 9 your time, but you guys will still be up. So let's do an 8 o'clock show. And let me think. We could do precious metals. I mean, because that's hot. Let's do that. I'm going to line up all the ones that are either commodity based, precious metal, so in bonds, oil and gas, the defensive. We're going to look at the defensive daily factor. And so I'll even throw the inverses in there. We'll look at winter and we'll look at fiat. We'll look at all the defensive ones today. That'd be a good theme. So that's the night. That's the theme tonight. We'll look at the defensive. We'll have a defensive episode of the daily factor. How's that sound? All right, guys. Well, hey, I appreciate you guys being here. I appreciate the first-time commenter. I've already forgot your name, but it was Mark, Mr. Stewart there. Thank you so much. Thank you so much for being here. And to all the other guys that are always here, and to the returning people like Doug, thank you so much for being here, guys. Of course, BR and Skeptic are here every day. I can't get rid of them. No, I'm just joking. Yeah, K-Cop Lance. So who's getting K-Cop tomorrow? So that's based on copper, of course. Let's look at copper futures. So here is, I was trying to find this. I don't know what MCX is. I think this is a foreign exchange. Oh, it should still move the same. Where does copper trade in America? The COMEX probably. Yeah, HG. HG. I like how the commodities lots of times are their symbol. Is copper HG in the periodic table? I don't know, but I bet it's copper HG because gold is like AU, and there's a fund called IAU. A lot of these they name they make the ticker to match, but I wouldn't be surprised if HG is copper, but it doesn't sound familiar. Anyway. Fish tries not to invest more than 1% in the fund. Well, unfortunately, yeah, I have more. I wish I just had 1% in blocks and ULTY right now because they've been hurting me. HG's Mercury, yeah, I did say it didn't sound right, but I knew Mark. Mark's our resident science and engineering and math expert. He can do all the math, any type of advanced math. You go to Mark and he has the answer. All right, guys. Hey, well, thank you so much. I appreciate it. And yeah, CU is copper. Yeah, see. Well, let's look at CU. Okay, so let me just pull it. Well, let's see if okay. I bet you there's a symbol. I bet you CU goes back to something copper related. Yeah, copper. I mean, they, NYMEX. There it is. CU Chicago. Well, that's ethanol futures. But the NYMEX, I think, is where these things, where metals trade lots of times. Carnival Cruise Line is, their symbol is kind of an unfortunate symbol. They need to work on their branding, I would say. Anyway, all right, that's a story for another time. You guys, thanks so much. I appreciate y'all. Be here at 8 for the or 9 your time for the Daily Factor, and I'll talk to you soon.